The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 16th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence behind financial freedom out there. Hope everyone is off to a great start. Let's make sure that we have a wonderful Wednesday. Let's do all that we can do. I'll do all that I can during the next couple of hours. We'll take a look at different technical patterns, tactical type patterns out there. Our A to B equals CD patterns, the lightning bolt. We'll take a look at Fibonacci expansion and retracement. The combination of those two, they make up the Gartley buy or sell, the butterfly buy or sell. And, of course, we'll take a look at Japanese candlestick charting out there because those are the signs that the bulls and bears make for you and I each and every day. This is a call-in talk show. That means you can give me a call. We'll take a look at your stock chart. I know the apprehension behind giving a call into a radio show, but I'll make it as comfortable as I can. Our number, by the way, it's 877-927-6648. You can give me a call, folks. Happy to take a look at your stock chart out there. And let's do all that we can do, as I say, to have an incredible, extraordinary Wednesday. If you'd like to test drive my newsletter service, just go over to the homepage at TFNN.com, click on my name, Steve Rhodes. You'll see that down towards the middle area. Then click on Mastering Probability. You can test drive it for the next 30 days. No risk to you. It is Wonderful Wednesday. This is Tiger Financial News Network. Right now we've got the Dow is up 55 points. S&P are up 8. NASDAQ Composite up 26. Russell 2000 up a couple of points out here. Gold's up $4. Silver back 6 pennies. Light sweet crude up 76 cents. Let's get things kicked off. Let's go take a look at some of the. I'm going to go back over to the futures contract here just for a moment. The daily. I didn't get a chance to do this during the first hour, so let's go do it now. Let me give you some of the profile levels for us to be focused on and paying attention. I think the most important profile level for us to watch is really inside the Russell 2000 because the Russell 2000 has been a weak link. So we can learn a lot from a weak link out here. The Russell 2000 today closes above 1153.32. It would all of a sudden be providing us with a message of maybe, I just say maybe, not being short the Russell, which has been leading to the downside out there. Don't know that it would give you the message of being long either. You'd want to see what happens as price gets to 1166. But should it close above 1178, that would be giving you a bullish message, and that would be joining along with the rest of the troops out there. So you got the Russell 2000, which oftentimes is really a leading indicator. You know, when you've got the Dow moving higher because of the type of weighting structure within inside the Dow, and you've got the Russell leading to the downside, it does have to make you say, something to think about. In fact, if we just take a look at retracement levels as well, logical retracement levels, that means coming off of the low here from May 15th up to the high that was put in on July the 1st out here inside the Russell. What we'll see is it's below the 0.382 retracement level. It makes sense that it moves down to 1126.34. So right now the Russell's still in what we will call bearish territory. That is not the same case inside of the other two, let's call it at this stage, the other two, because the S&P 500 has not proven itself here just yet. If we take a look at yesterday's action, it ran out of gas. It found resistance at that 1174 mark, has not been able to close above it. You're trading 1974. Shame on me. 1974, that is the number. You're trading 1974.75 as we speak right now. Is this another day where it can't bust them up to the upside? Who knows? Might be. Here's the key to the downside, 1961.50. It closed below 1961.50, and that gives you a message that, okay, maybe it does want to move south and it wants to move to the downside. But right now, as long as it can stay above that 1974 level, that would be bullish. If you can close above it, that's a daily chart that we're looking at. The NASDAQ is in a world of its own out here. However, what it needs to do, it needs to close above 39.18. It did not do that yesterday. Did not close above 39.18. You're at 39.37 right now. If it closes above that, it carries with the message of moving higher. price-wise. If you take a look at the Dow has been super strong. It's well above its resistance level of its market profile high, 16,889. It's up above swing points. Even it's up above yesterday's swing, which was at 17,045. Of course, on an intraday chart earlier, we were taking a look at the Dow. We were taking a look at the 3-drive to a top pattern out here. It did confirm with a reversal signal, a key reversal session out here. Therefore, it says if the Dow on a 30-minute chart closes above 17,076, of course, the key reversal session high is 17,069, so that would really be the number you'd be looking at. That says that this most bearish of type patterns, and this is a 30-minute chart, says that even that isn't enough to turn back price out there. Let's take a look at things that are moving inside. So that really kind of sets up the market. Well, let's do this. Let's go take a look at the ETF structures. Most people aren't trading the futures out there, but the futures really help us to really stitch together the better market profiles. Let's go take a look at the ETF structures out here. Let's look at the Qs. They're trading up 68 cents as we speak right now, trading up 0.9%. Out at 39.50. I was looking at the XLK. Trading out at 96, up 0.7%, up 69 cents, trading out at 96.20. As we take a look at the QQQ, it's up above its resistance of its market profile. That's at 95.39. Of course, that doesn't really tell the whole story out here. If we go take a look at the QQQ ETF, let's do that. Well, we did see yesterday, and so this will be an important session here. What we saw yesterday, let me try to do this. Let me do this. I don't need to try. I can do anything that I want. How about that? How about that for an attitude of life out here? Let me also get rid of this. Let's take a look at yesterday's session. Yesterday's session, if we take a look at it, we're blowing it up on my stock chart. The prior day, July 14th, the high was 96.06. Yesterday, the high was 96.13. The prior session, the low was 95.54. Yesterday, the inter-session low, 94.83. What does that set up? That says that is a key reversal session. Take a look at the body of the candle, completely engulfing the prior day. That says that is a bearish engulfing candle. If we go ahead and take a look at resistance out here, resistance ought to be the high of that trading session from July 14th. That says today, if you see it close below 96.06, then you've got a failure. You've got a key reversal session. But what the key reversal session really needs today, at least was what it needs in my book, it would need to see the Qs close below 95.70. That's the open from July 14th out there. Why am I focused on the Qs out here? Why did we focus on the Russell 2000? Well, inside the Qs, what I was focused on was a little 1.618 butterfly expansion pattern. That's coming off of the swing points from back here in March 7th. 2014, from that high down to the low in that key reversal session, by the way, on April the 15th, and all the way up to the high that came place yesterday. You'll see a 1.618 expansion. It means that it's something that we should pay attention to, especially because of yesterday's reversal candle out there. However, these patterns, like all patterns, you always like to get a second opinion, and a second opinion means the very next trading session. That is today, so that makes today's trading session very important out there. So that's what's going on inside of the QQQ ETF, market profiles, and other patterns. Let's go see what's going on inside of the IWM. Up 12 pennies right now, 0.1%, trading out at 114.65 as we speak. 115.17 is its market profile low. It says a close above that. It says tighten up your stops if you're short. And if you get above 116.97, meaning close above 116.97, it says its move to the downside is likely over. Otherwise, this is remaining. This is got selling pressure on it. Says that it wants lower price. And at this stage of the game, it says it wants lower price, moving all the way back into that May 15th area where it formed that little hammer candle. That's what's going on inside of the IWM. If we go take a look at the Dow Diamonds, up about 0.3% right now, up 47 cents as we speak. Let's go see what it is doing. Well above its market profile resistance area. It had formed a new one back here on July the 9th. That says 168.76 is the number. If the Dow pulls back tests that and rejects that, that would be bullish. If it gets back below 168.76, then the number to watch is 167.40. You get below 167.40, and the change in trend would be in place inside of the Dow Diamonds. Dow Diamonds also have a 1-to-1 A to B equals CD to the upside, and that's the pattern right now that you have to expect is most likely to occur because it's up above resistance. And that says the Dow Diamonds can easily move to 172.82 or so. So no, and yesterday was also, if we pull this back here, the Dow Diamonds yesterday also having a key reversal session. We can see that the diamonds here had moved above intercession, above the high and below the low of yesterday, and then just simply closed lower. That's all that was needed. No bearish reversal signal, if you will. No bearish engulfing candle. No bearish reversal signal, other than it being a key reversal session. That would say that today, ideally, that key reversal session, in order for it to really come to fruition, you need to see it close below 170.38. You are 170.89 as we speak right now. Okay, we've got one more left. That would be the SPYs. iSPY, that's up 0.3%. It's up 67 pennies. It's trading out at 197.92. It too yesterday having a key reversal in its session as it got back into that July 3rd swing point. Today, a close back below yesterday's open. That's at 197.92. That was a bearish engulfing candle. That would suggest that, okay, we've at least got a short-term top. Whether that lasts a day or lasts until next Thursday, that we won't know. Support inside the SPYs here from a market profile standpoint, 195.20. 193.46 being your ultimate level of support. A close below that suggesting that a change in trend would be in place out here. Let's go take a look at the XLF, the financial sector. It's down 3 pennies as we speak right now, trading down at 22.96. The financial sector, we took a look at that yesterday. Nice strong moves inside J.P. Morgan, inside of Visa, inside of MasterCard. But what the XLF was unable to do yesterday was unable to get above the July 3rd high. 2307 is that number. There were 22 million shares up there yesterday. 29 million shares. Should have been able to take that out. Was unable to do that. Nonetheless, no reversal signal. It does have a resistance level of its market profile. That's at about the level of 2293. You're trading at 2295. Ducking back below 2293 says that price ought to move down to 2249 out there. That should be the final area of, not the final area, but that should be a strong area of support. Right now, excuse me, sorry, I got a little dust in my throat out here. We've got the Dow's up 51, S&P is up 6.5. You got the NASDAQ composite up 21, Russell 2000 just slightly green out here. We'll take a look at gold and silver. When we get back from this next break here, we're going to go out to we're going to go to Orlando. Take that back. We're going to talk to our man Rich. He wants to take a look at Bank of America. BAC is a ticker symbol. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Money Masters Show, folks. I'm your host, Steve Rhodes. Right now, the Dow is up 47. The S&P is up 6. And we're going to go out to Rich in Orlando, Florida. Rich, thanks for calling. Thanks for holding. How are you doing this morning?
Doing real well, Steve. It's a real nice day in Orlando. I'm sorry to hear you guys got some rain, I guess, out your way. But
yeah, there's some dark clouds out there. And but that's okay. Just blow your weather over to Clearwater.
All right. We'll try to do what we can do.
All righty. You wanted to look at
on GPL. Is this just a pause that refreshes, or is this the beginning of something of a more of a problem? Because it took off nicely, and then it did kind of correct pretty significantly, but the volume was light the last couple of days. That's my question. And your thoughts on GPL?
Are you in the equity?
I am in the equity. Actually, I'm in there at like 127.
Okay, and you're trading right now at about 130. Here's the thing. If we just focus on we'll just focus on Great Panther, folks. GPL is a Great Panther silver. It's trading right now at about $1.30. And so if we just simply focus on this stock chart out here, pulling back into the breakout, it's been pulling back the last couple of days. It's been doing it nicely on light volume. And what I'm looking at is the trading session from July the 8th. Nice breakout, 2.8 million shares, 2.9 million shares the next day. Yesterday's pullback was on 1 million shares. So that's the way you like to see something coming back into a breakout area. You can easily make the case that this will come down to about $1.21 to that breakout session. Could even be $1.17. So to the extent that that it's not a problem for you to take that kind of heat, then the pullback on light volume looks pretty good. Where this starts to get maybe a little bit tricky, and I know you listen to TFNN often, is as gold was moving up, I've been primarily the one inside TFNN and has said, hey, not so fast out here. That
I would say you're kind of out there alone on that.
Absolutely. And but I don't, to me, I'm just reading the stock charts and the information, the work that I do, and that's really all that I pay attention to and listen to or make my trading decisions. Now, what I have, and the reason, so I'm putting the chart of gold up on my screen out here. And as I do that, this is the current contract for gold. It made one of my favorite patterns because it helps us to understand when markets are stretched to the downside incorrectly so, as well as when they're stretched to the upside incorrectly so. In the case of gold, as it was making a low back here on December 19th, as we take a look at its daily chart, it was making one of those price relative strength divergent patterns out here, and it bounced off of those lows. And where it bounced off of those lows to was when it made a price relative strength divergent pattern out here on July the 10th. And then a couple trading sessions ago on July 14th, big old bearish engulfing, big old evening star pattern, and that says you've got some significant resistance. We had follow through yesterday to the downside. Not a good thing inside of gold. The reason is because if the large commercial traders weren't at such net high short positions this go round, I wouldn't have had as much conviction that the large commercial, with regard to the fact that the gold was getting mighty extended here. Now today, gold has been trading up just slightly. Its 200-day exponential moving average is where it's trading below right now, which is at 1308. The 20-day looks like that's at about 1291. Rich, my expectation here is that gold is going to make a scary low. That we're seeing gold. So my opinion is, as I read the stock charts and I put everything together, I'm looking for gold to move lower. Now that move lower could take place over the next several weeks out here. So I don't think it's something necessarily where I'm not forecasting the day. I'm not forecasting anything, but I am expecting gold to move lower. And the question is then going to be, how will the miners hold up during, if that comes to fruition? I got no guarantees that it will. If that does come to fruition, then how do the miners hold up? And so far, with the move that we've seen here in gold, I certainly like the way that Great Panther has held up. But I just don't know, when the whole thing, if in fact the way that I see it works out, then I think they all go with it. So I think the only way you can trade it is to have your stop in place. I like Great Panther, but and I like Great Panther because if you put it on a weekly or a monthly chart, it's a eventual thing of beauty. And that thing of beauty is that high volume high from March of 2001, and says that at some point in time, and I hope it's in our lifetime, you'll see this equity get back to 504 to the 355 area. So I hope that helps you out.
Appreciate it very much. Thanks, Steve.
You bet. That was Rich in Orlando, and also Great Panther on a monthly chart. By the way, 151 is its market profile resistance area, and that's where it's found resistance. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 51, S&P is up 6, Composite up 19 points. Russell 2000 still struggling here, down a couple of bucks. I had a request to go take a look at Bank of America by Mike. So hopefully, Mike, you're still listening in. We'll take a look at Bank of America. I don't know if you were long, short, or what have you. It doesn't really matter. Let's go take a look at the stock chart and see what Bank of America is doing. It's trading off this morning here, down about $15.46. If you were one that was long Bank of America, what you want to be watching for is you'd like to be watching this trading session right here on June the 16th. June the 16th, you got 55 million shares down there, and that is a hammer candle. So if I put a line across the screen, what you don't, if you're long, what you don't want to see is a close below that trading session, $15.18. There's also another hammer candle right here in the trading session of June 25th. Let's put another line in on that. That low is at $15.28. Those are your basic support areas from a candlestick standpoint. With regard to market profiles for Bank of America, 1537 is the number. If Bank of America moves down into these hammer candles, let's take a look at volume on both of them. June 25th, it's 72 million shares. On June 16th, it's 55 million shares. So let's use the 55 million shares. Today, the pullback is already 55 million. So today's out of the question. But if volume starts to kind of dissipate out here, if selling dries up, and you were looking to go long Bank of America, and I don't know that that's the case, then your buy is somewhere between 15.18, 15.28 on light volume. And, of course, you want to see it get back above its market profile pretty quickly out here. If you see it close below that, then long is the wrong message, is the wrong move out there. And what we have here is a little bit of a consolidation, but I would just say take a look at the retracement. So let's go look at the retracement levels. That means coming off of a low back here on May 16th up to this little high that was put in on the candle session of July the 3rd. And the 0.618 retracement level, that's also right around those hammer candles. So that's at 15.10. So break below the hammer candles sends Bank of America down to 14.78. I'd have to say more likely it would make a 100% move and go back to the May 16th area. And that's what the daily charts for Bank of America show. Let me pull this back just a tad here, see what else we would take a look at, see other ways that you could possibly trade Bank of America. I would say that you could also draw a trend line. So if you were one to go long, what would you be looking for? Well, if we look at the trend lines out here, I'll use the high of the session from March 21st, 2014. And then I would just go ahead and use as another touch point out here the trading session from July 3rd. So there's your lower highs. Here's your higher lows. Let's go ahead and draw that trend line. So we've got competing trends that are in place here. So here is probably your trend line right here. Here's your little, and so in this case, if and that trend line, by the way, today it supports seeing a move down to that market profile low in the 1537 level. So if you break the trend to the downside, plus you break the hammer candles, then being long is wrong. A breakout above the trend, that would be positive, and that would mean you would want to see price moving into that July 3rd level with more than 70 million shares. But remember, July 3rd, 70 million shares, it's really not 70 million. That was a shortened trading session. So you'd have to do some type of algebraic number equation to try to figure out what that might be. So that's what the daily chart for Bank of America shows. If we look at the weekly chart out here, weekly chart for Bank of America, let me go ahead and get rid of those trend lines out there. Let me do that. Come on. There we go. And as we take a look at the weekly charts, Bank of America right now trading right at its resistance level. It's a market profile right around the 15, looks like probably about 1550 or so. You're at 1548 right now. Let me get rid of those hammer candle lines as well on here on the weekly chart. They carried over. There we go. So it says 1460 would be some pretty decent, could be some pretty decent support inside of Bank of America. Getting below or closing below May 12, 2014 at $14.37 probably sets up an A to B equals CD to the downside. So I hope that helps Mike in Safety Harbor as he takes a look at Bank of America. Let's go take a look at the IBM and Apple. Mitch in Boston posted IBM in the Tiger's Den out here. Of course, they are out with earnings at some point here soon, I believe. I don't recall that it's today or this week. But let's go take a look at IBM and Apple announcing a marriage between the two of them. I'm not sure if Steve Jobs is rolling over in his grave out there. But because that's something that you wouldn't have thought you might have seen out here with regard to their vigilance of saying, nah, I don't think so. But nonetheless, they have formed a union. Let's go take a look and see what is going on inside their stock charts. IBM is up $3. That's up 1.5%. I believe IBM had some pretty strong patterns before the move out there. I wonder if somebody knew that these guys were getting together out here. IBM on a weekly chart's got a resistance bearish engulfing candle from the week of May 14th. That says real resistance at about the 199.21 level. Trading above, trading at 191.48 right now. That's what the message on the weekly chart is. Let's take a look at the daily chart. The daily chart shows us. I thought I might have had a pattern in here. Probably had an A to B equals CD. So we'll go ahead and we'll draw that pattern in. That A to B equals CD pattern inside of IBM. The A point is down here on the trading session of June 26th. Your B point is up here on the trading session of July 2nd. Not much of a retracement out there, but it does look like IBM wants to move up to about 195.93. 195.93 to maybe 198.57 out there. That B point had volume of 5 million shares. It was up and over with 4.5 million shares, but this morning here it gapped up. It has gapped up, already done 2 million shares in only an hour worth of trading. So it's got volume clearly to the upside. Now, if we take a look at retracements where it would set up a little Gartley sell pattern, a potential Gartley sell pattern, we come from the swing point high, that little shooting star. That's your real reversal on a daily base. That is the April 10th high. We go from there to the low that was put in on the trading session of June the 26th. You can see you're already above the 0.618 retracement level. That's 191.59. You're trading at that area right now. 0.78, so it has in essence formed a Gartley sell. Sorta. Really hasn't. Because the Gartley sell pattern needs an A to B equals CD to the upside. And that would really take place at the 0.786 retracement level. That would be at about 194.94 out there. So I would expect IBM to get up into about that range. Let's go take a look at Apple. Apple right now is trading out at 96.32. You multiply that times 7. We'll call it $100. Guess what? It's trading all the way back to its highs, its original highs, in that $700 range out there. Apple has an A to B equals CD to the upside. Its B point at 95.05 at 62 million shares. It was taken out with 65 million shares. 1-to-1 A to B equals C to the upside says Apple wants to go target the 101.80, maybe even 105.10. That says Apple takes out its old highs out there if you account for the stock split. So that is what's going on there. Let's go back and let me see what's going on inside just the general market here. So you got the Russell just is dismal. However, liquidity-wise, okay, let's do this. Let me go back and because we got about 20 minutes, but let's go back before our man Basil Chapman, before we go ride a wave. So I've got my surfboard. It's all waxed up. I'm going to go ride a wave with Basil today. I want to go take a look at, we've got two things to focus on, as you know, liquidity-wise. We've got the VIX index. Gap down this morning, but it's been coming back out here. Nonetheless, below the 50-day exponential moving average, and that's plenty of liquidity for the marketplace. Above 1202 today, that's the 50-day exponential moving average. That gets back into bearish territory. It's competing with none other than the Euro-Japanese yen, which has been breaking down, but we got a lot of time left in the trading session. It completed a 1-to-1 A to B equals CD, and as it did, it gave us a nice little bullish engulfing candle on the 30-minute time frame chart out here. But we're not seeing any follow-through. That's this session right here, coming into 10:30 this morning. This is on a 30-minute basis. It is also in an oversold condition. You're not getting any follow-through here. It is in jeopardy of busting through the lows. And that low here, the key level to be watching, is going to be the session from 10:30 in the morning. That's back on July the 10th. 137.48 is the number. If we go back and look at the daily chart for this currency pair, sure seems like it wants to go ahead and bust through those lows. But if it can't bust them down, well, then you'll see it just, I guess, move sideways here. But it certainly has been in a downtrend. If I take a look at, here's the current daily contract for the NASDAQ. It is, here's, you can see the key reversal on it. We mentioned the key reversal session inside of the Qs. We had a key reversal session also yesterday inside of the NQ. However, no follow-through this morning. And that says that price could easily move up to the top of this little rising price trend channel out here. I say trend, more of a trend than a channel line because I'm not using the co-located bodies, the opens and closes. But that is a rising trend that price has been traveling within. Silver not doing much. Gold not doing too much here. Let's go take a look at their market profiles. Let's go see what we have for a message there. We take a look at Goldilocks up about $6 this morning, trading out at 13.02, but that is really just working off an oversold condition out here. The weekly chart. Now, here's an interesting thing on the weekly chart for gold. Look where price has held here thus far, and that is at the market profile low. I mean, it's trading like right on it. The close below that would say if you were long gold, because this is a weekly chart, you might want to reconsider that position out here. But right now it's holding the weekly market profile. The daily, all we've seen, the 240-minute chart. Let me go to the daily first, then we'll come back to the 240-minute chart. The daily chart, it's trading below its market profile low at 1308. So the daily chart saying just a little bit of a counter trend rally. We'll take a look at gold maybe a little bit further, but we want to go out to Chicago to our gal Chris, who wants to take a look at Tesla, I believe. Chris, thanks for calling. Thanks for holding. How you doing this morning?
Hi there, Steve. I'm doing great. I was listening to your earlier discussion on the Gartley cell pattern,
yes.
And I was hoping you could look at the ABCD that has completed on Tesla as of July 1, started in May, and now we've had a retracement, and we're kind of doing a little consolidation right here. My concern is, ordinarily I would think if this came up to about the 235 area, that it would be a great short. Thinking of a Gartley short. However, we're coming down right now into that huge, high-volume, wide-ranging bar of June 16th. Does that change your thinking at all about this?
You know, Chris, I think you're going to make a great co-host here. So I tell you what, I'm thinking of taking next Friday off. Would you do me a favor and fill in for me?
Sure, anytime, hon.
Okay, perfect. Because you did a great analysis of Tesla, folks. Hope you're watching us on Tiger TV. And Chris here has nailed this one with regard to what Tesla has been doing. Now let's go try to figure out what Tesla might do. But to answer your question specifically, right off of the bat, yes, I would be concerned about that wide-ranging bar on June the 16th. We certainly can't ignore any of the messages on the left-hand side of the chart. They really help and assist us with regard to where we ought to find price resistance and support out there. What I will say is that that's on the bullish case, as far as where it's traveling into, and volume on the pullback, as you say, it's a little bit light here. It's only made a 0.382 retracement. But I'm going to assume at this stage you know that. That's at the 218.79 level, and you're trading at about 220 right now. I would have to say that the real key in focusing on a Tesla is, to a certain extent, what happens here at July 8th. That low, that 220.96 with 7.8 million shares, can it bust that out with volume? I don't know that it would have the volume of 13 million shares from June 16th. If it did, then the move to the downside would be real. And what you're focused on then is that May 8th level, where you've got a high volume type low out there, and that is at about a price point of 178. Now, you had indicated that if this moved up to about 235, that it might be an ideal short. Was that what you're taking a look at this trade from the short side at this stage? Is that what I heard?
Correct.
Okay.
Correct. I'm looking at the huge down volume day we had on July the 2nd, and I'm thinking that that's going to be a lot of inventory sitting up there waiting to be distributed.
Yeah.
And so if we came up to even the 233 level, which is the 618 retracement of this last leg,
great.
That it would possibly be a short then. But, of course, it is Tesla, and the stochastic has it as oversold.
Mm-hmm. I think you've got it pegged. And if you were going to go ahead and take a short, that 232, 233, 235 area is good. Your stop has to be about 245. You got to give it at least $10. All righty?
Yep. Okay, that sounds great. Thanks for the help, Steve.
That was Chris in Chicago with an excellent analysis of Tesla, TSLA. And we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. A couple of other pieces of information for Chris on that Tesla move out here. During the break, took a look at the daily market profile out here. And what we can see inside of Tesla, the green lines, the support lines, have acted as nice levels of support on the way up. Now we've got the red lines, the resistance lines, really acting as showing us that we have begun to see a change in trend inside Tesla. That would be unless it closes above 231.77. That's its real resistance area. So, Chris, that might be the most that you get out of a bounce to the upside here. Likewise, if it closes below 217.50, 217.19 before that time period, and then also close below that swing from July 8th. Then we're likely to see a move lower. And what's interesting here, the ultimate move lower, I would say, or the ultimate buy inside of Tesla, based on the last two tests. If you take a look at the stock chart, this little blue dashed railroad line going across my chart, that's a 200-day exponential moving average. And the last time down in January, that held that support. January of 2014 as well as in May of 2014. Right now that's at 192, so I think you need to use that for your target level as to where price would fall to. Let's go to Plymouth, Massachusetts, to our man Paul. Paul, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing, Steve. How about yourself?
Excellent. Thanks so much for asking. Tell me what you're looking at and how I can assist you.
Well, I'm in the TZA. I bought some, I think it was last Thursday. I bought some more on Monday, and I'm looking to see what you think, if it can get to that 16 level.
If we take a look at TZA today, right now you've got a swing point that it's dealing with. That's the swing point from July the 10th. That high is at 1551. You're at 1553. That had volume of 28 million shares. You came up into it yesterday with 26 million shares. Today, however, you've got 9 million shares with an hour and a half of trading. If volume continues at this pace here, and you see TZA close above the July 10th high, 1551, what that's going to do, Paul, that's going to set up an A to B equals CD to the upside. That would be confirmed. That would say the minimum price objective would be $16.85. Was it $16 was the number that you had mentioned?
Yeah, well, I figure once I hit 16, I'd be getting out unless I saw some real signs of upward mobility there.
Here's what I would also do. So I think the 1-to-1 A to B equals CD, if it can close about 1551, do it with volume today, says 1685 is the number, and then 1748 would be your next A to B equals CD extension. And that's really what I would expect you to see and get out of TZA at a minimum. Of course, what we also have to do in order to really track this is see what's going on inside of the futures market here for the Russell 2000. And if we go take a look at that, we take a look at TZA specifically. What it looks like to me that the Russell 2000 wants to do until it decides to change its change in trend is actually make a move all the way back into the May 15th time frame. So, you know, maybe you've got a number of different ways to trade it. Trade it the way that you want. At $16, take your money off the table. Take some off the table at $16 or put in a trailing stop of some sort because if you don't see a reversal, I think that this more likely wants to move down into that May 15th level. Your next area inside the Russell 2000 on the futures contract where you could see a bit of support or sideways movement is probably at 1126. You're trading right around 1144 right now. If it continues to move lower with volume, well, that's really an indication that you've got selling expanding to the downside. And I would also say if you were to see, Paul, if you were to see some reversals inside the NQ, inside of the Dow, then the Russell 2000 ought to accelerate to the downside as well. So that's how I would look at the overall trade. I hope that helps you out.
It helps me out tremendously, Steve. I'll keep that trailing stop, keep moving it up.
Oh, perfect. That was Paul in Plymouth, Massachusetts. It's TZA that he was looking at. Folks, we're going to go up to Massachusetts in just a few minutes with our man Basil Chapman. So I've got my wax out. My board's all ready to go. I'm going to go ride the Chapman wave with him. You should as well. Have a great Wednesday. I look forward to seeing you bright and early tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.